But let's talk about the big news flow that we had yesterday. The Supreme Court has cancelled 204 coal blocks allocated since 1993 and spared just 14. What could the impact be on India Inc. and what are analysts saying? First, let's get Madhu Terdal, the Group CFO of GMR Infra, into this conversation, and in a bit we'll get Prasad Baji of Edelweiss, who tracks the space closely. Gentlemen, morning to both of you. Mr. Terdal, good morning. First, if you can tell us about the impact that the Supreme Court ruling would have on GMR Infra, because I understand that a couple of 2 or 3 of your mines have been cancelled. What is the kind of damage that you see, and how much would you have to pay to regain these blocks in the auction process, if there is any ballpark estimate or numbers that you've been working on?
Sonia, good morning. First of all, let me clarify to you that GMR is not at all impacted by this order, where certain coal blocks which were allotted to some of the operators have been cancelled. GMR was allotted a mine called Rampuya in the state of Orissa, and that coal mine was given to about 6 people jointly. Along with us, it was given to ArcelorMittal, Reliance, Lanco, and so many people. All these people had different strategic plans. In fact, for example, ArcelorMittal cancelled their plans in India, and they did not want to use the coal mines. So in our view, definitely we would have taken another 5 years minimum to extract coal from this coal mine. And looking at the way land acquisition policies are there, the difficulties in the state of Orissa, I think it is better handled by the government of India rather than a private company like ours. So we are not impacted by the cancellation of coal block. And indeed, instead of that, we have already been given a tapering coal linkage for the next 5 years. That is till 2020. Already the problem in the coal mine was anticipated, and government has already given us a tapering coal linkage for 2020.
Okay.
So
you will. When will you next need coal, Madhu? And you have you got all the coal through FSA for that period?
Yes, Lata, we have been given full coal. We are getting from the current coal mines which are given to us Core India. We have got a firm coal linkage for 500 megawatt that is already in operation. For the balance of 550 megawatt, we have been already given a tapering coal linkage.
Okay.
And wherever there is a shortfall, we can import the coal from our own coal mines. So that also is possible for us.
Okay, and will you therefore bid when the existing 46 guys are put on the block?
We haven't thought of that as a group. I think I will not be able to comment on that.
That is yes or no, not whether you will outbid the existing guys or anything, but you would be interested because these are well prospected and running mines.
I think it makes sense without talking from the company's angle. I think it makes sense for us definitely to go for the bidding.
Okay. The judgment is silent on the auctioning process, but if the deallocated coal blocks, when they are auctioned, will it have any kind of inflationary impact on the power tariffs?
Yeah, I think to a minor extent it should be having an inflationary impact. But what is important to know, if we have understood a little bit of the government plans, what the government is likely to do is Coal India is going to bring in some very, very experienced and world-class operators into the game. Companies like Anglo, companies like Rio Tinto, which are very large mines with very high quality of technology and the resources. If these kind of companies are given the what is called as the mining contract by Coal India, in my opinion, not only there will be a very high quality of coal, as well as the efficiencies will be brought into the system. So I think whatever to the extent of minor inflationary impact it may have, I think it can be offset by the quality as well as the speediness in which this mine can be extracted.
Okay, well, speed of government action is a little bit of a question mark at this point, Madhu Thedar, but thank you very much for putting into perspective the current impact of yesterday's decision on your company. No impact now is what GMR says. Prasad Baji, the Senior VP of Institutional Equities, whom you can see on your screen, is also with us. Prasad, what is your sense of the most impacted companies? Now, we know about JSPL and Hindalco, but barring these companies, which are the ones you think are going to be severely impacted?
After Hindalco, JSPL, among the private producers, CEC is producing around 2.8 million ton. So they will need to bear a penalty, at least from the group level as such. It is unclear whether this penalty can be passed on from the tariff at this stage. But at upfront, at least the penalty is there. After that, the producers are much lower in number. You have Prakash Industries at 1 million ton, Usha Martin at 0.8 million ton coal production. Monnet is around 1 million ton. So it's around that level for 4-5 players. Totally, the private producers are around 20-22 million ton out of the 40 million ton that India produces on a captive coal basis.
Okay. Prasad, hi, morning. Coal India was up 5% yesterday. They have been allotted these 40 coal blocks, but there are so many unanswered questions with respect to what the management fee could be. So there's quite a bit of uncertainty. At this price, what would your view be on Coal India? Do you expect it to increase further?
Our current target price is 360. We have not taken the benefit of the new coal blocks. Yes. Upfront, definitely these 40 million ton production comes to Coal India, but eventually there will be some re-auctioning. Net, what one can say is that out of this 40 million ton, if 20 odd million ton is with state PSUs, then there is some likelihood that may be retained by Coal India, considering also that the Supreme Court judgment that essentially ownership of resources for merchant mining should be with central government, and only captive miners can be in the end use sector. So that the state PSUs which are producing around 20 million ton, that may be retained with Coal India, and that benefit can certainly come. Yes, there are question marks on how the takeover would happen, what happens to the land acquired by the existing mine owner, to the infrastructure. There are many question marks. So directionally it is positive, but I think the quantum cannot be ascertained fully at this stage.
Okay. These assets are not on Coal India's books at this point in time. I'm wondering how they will account for it. What will be the accounting procedure? Will they get a management fee? All those questions still remain unanswered. Prasad, we will come back to you in like 2 or 3 minutes, because we are about 10 seconds for the markets to open, and thereafter we'll ask you a lot more questions on power and coal, of course. But at the moment, the Sensex and the Nifty are both in the green. Sensex starting with a 0.25% uptick. Let's see how things are opening. Okay, actually marginally in the green, 0.2% higher for the Sensex and the Nifty. Sensex slightly higher, and the big gainer is the stock that you were talking about, Sonia, Coal India, 2.2% higher at this juncture. So market still expecting positives, though inestimable positives for Coal India. M&M is the other gainer, 0.6 up. I'll just rattle off the stocks that are in the green, because a substantial number are in the green. Cipla up 0.8, Unilever up, Hindustan Unilever that is, up 0.9. Then Larsen & Toubro about 0.2 up, Maruti Suzuki 0.2 up, BHEL 0.5% up, HDFC Bank 0.5% up, Tata Steel up 0.2, ITC up 0.2, Infosys 0.2, TCS up 1%. So quite clearly big defensive play here. Other than Coal India, it's the defensives that are rising. But surprisingly, even stocks like SBI are in the green, at least in the early morning tick. And the other two defensives, Sun Pharma as well, up about 0.1, and Wipro up 0.5%. What's in the red at all? Reliance Industries, yes, that minor negative of the gas price decision not coming through, and ONGC, big negative, minus 2.8. So that's where really the negativity is hitting, of the decision not taken. We did have some people scaling down, I think Morgan Stanley scaling down the EPS of ONGC for the current year, assuming that at least the first 6 months now is gone without any oil gas price increase. Hindalco is down 0.8, again one of the casualties of yesterday's coal decision, Axis is down 0.5%, and I thought I saw ICICI also in the red. So clearly the private sector banks, because of this exposure, okay, ICICI Bank is now in the green. It started off with a minor red tick, but Axis continues to be in the red. It's about 0.5% lower. Maybe for good measure, we should look at even Yes Bank, because that too has some infra exposures. Yes Bank has got a 1% downtick. But why don't we pull up PNB and Union Bank? Those stocks logically should also see a bit of pressure on them. Okay, 1.2% down, 1.5% down on Union Bank. These are companies with exposures to power companies that could be facing higher coal costs and higher cost of buying back their own coal mines, as well discoms which are unable to pass on the power prices and therefore likely to find more stress. So there is a bit of inestimability, difficult estimation as far as their pressure goes, but we really don't know how these decisions will go on. More negatives. JSPL is down 3.5%, Punjab National Bank 1.4%, I told you that. So those are the main stocks that are impacted. Let's look at the green ones. IDFC not so impacted, 0.2 higher, 0.3 higher now. Kotak Mahindra Bank, Lupin are all largely flat to marginally in the green. HDFC Bank, of course, not seriously affected by this, is in the green. HDFC, the housing guy, housing mortgage guy, is up 0.2. And then Wipro, Sun Pharma, Bharti Airtel, Gujarat, Ambuja Cements, ACC are all up between 0.5% and 0.33%. HCL Technology is also up 0.5%. That's the lot. Marginally in the green, the index itself. What about the mid caps?
Well, the mid-cap index is flat, absolutely flat right now. The market breadth is in favor of the advances, so it's not really such a bad start to the mid-cap index. So we are seeing quite a bit of gainers, but let me talk about the stocks in the news. The stock that's getting hit the hardest this morning is JP Power. Of course, it is just a 12 rupee stock, so you know the base is quite low, but it's a 6% fall. The entire JP group is under pressure. The deal to sell JP Power's hydro assets has been called off, and this is the second instance, remember, in a span of 3 months that the proposed deal has been cancelled. So there is a big impact that you're seeing over there. Prasad was just telling us a while back about some of these companies like Prakash Industries, Usha Martin, CESC, etc. All of them are seeing big gashes this morning, to the tune of about 3 to 7% on account of the Supreme Court verdict. So that's another pocket that you should watch. Sarda Energy is down another 6% today. That one has been down ever since the Supreme Court ruling yesterday. JSW Energy is actually in the green because its lignite blocks are outside the purview of the Supreme Court verdict. So that one has been spared. So is the case with SAIL. That one too has been holding on to the green line. So these are a couple of stocks. But the power space is really downbeat after this whole news flow. If you look at names, not just JP Power for other reasons, there is India Bulls Power, there's Suzlon Energy that has its own set of reasons to deal with. Adani Power is down quite a bit. So that's a space that's not looking good at all. On the upside, Unitech is up about 4%. So there's some perhaps short covering that you're seeing there. PFC is actually in the green, so holding out. IRB Infra is up about 1.5%. Apollo Tyres is up 1.5%. Aurobindo Pharma, Marksans Pharma, Ashok Leyland, GSFC are a couple of stocks that are seeing buying, but it is expiry, so you could see a lot of jigs. By and large, the market is flat, so let's go back to Prasad Baji. We've been speaking with him about what the impact could be on many of these names. Let's just pull up the chart of JSPL. Prasad, I wanted to ask you a couple of questions on what the best option is now in your mind going forward. You know, many analysts are talking about a couple of scenarios. One could be auctioning of the coal blocks to the highest bidder. There could also be perhaps a tariff-based bidding that the government could take. And then finally, something that is politically may not be the best thing to do, but opening up the coal sector to merchant mining, etc. What do you think is the best approach that the government should take now?
I think in the short term and short to medium term, definitely the auctioning of coal blocks has to happen. Government has already said that they would be auctioning coal blocks. But I would say we would need very detailed guidelines and process in terms of how this would happen for the cancelled coal block. So in a cancelled coal block, you already have a mine owner who has invested in the land, invested in the infrastructure. If there is a winning bidder who is other than the incumbent, how this gets transferred, whether the incumbent has a right of first refusal. So government will have to come up with a detailed framework for all this. Government will also have to look at why the all the other earlier auctions, which were only 2-3, failed. Government has said that they would like to do it with approvals and land. So obviously for the producing coal blocks it is easier, but there will be clear guidelines on that. Thirdly, on the pricing or the reserve price for the auctioning, earlier the guideline was that it would be 10% of the DCF value with the valuation based on imported coal pricing. But is that really viable, or should we link it to Coal India prices? And how do we come to 10% number? So there, I think, a lot many finer points that need to be thrashed out before the auctioning is done. But I would say that is what we should expect going forward. Opening up the sector to the merchant mining definitely is there, but I would think that the government is going to consider it more in the longer term, because there is a lot of immediate fixing that needs to be done, considering all the cancellation that has now happened. So that I would keep it, I would expect, in fact, for the longer term.
Yeah, actually merchant mining is more of a philosophical question at this point in time. I just wanted to know, how are you going to approach the various power companies that you spoke about? They may not be in your coverage, but basically, even CESCs and GMRs and GVKs and a lot of others who will be looking for coal. Do you expect that the coal auctioning could see some fairly aggressive pricing? Because these 46, as you said, don't have any land issues, titles are clear, you don't have to prospect and see how much coal is available. Could there be aggressive bidding, and would that bleed the sector?
We can't conclude that there will be aggressive bidding, because, for these coal mines, they are already supplying to certain plants. So they will have all the infrastructure aligned for that. So for example, for JSPL coal blocks, there is a dedicated conveyor from the mine to the plant. Now, if there is any other winner, then how does he have sort of do the logistics as such? That is not clear at this stage. So definitely there will be bidding, but all these issues will need to be thrashed out as to, if a new winner comes, how does the change situation be addressed. So I expect bidding, but that's, until this is clear, it may not be necessarily very aggressive.
Okay, JSPL actually, Prasad, as we speak, is down another 4%, so it continues to be the big loser. You spoke about what your fair value on JSPL is, but if in case the premium paid during the auctions for the first few, operational mines gets to be a little on the higher side or a little aggressive, then how much do you think it could hit JSPL further? Because now there is this whole uncertainty and overhang looming.
Yeah, certainly. I think we obviously, when we do our numbers, we take a base case. So we have taken around 600 rupees increase in coal cost for GSPL, because I think the challenge is going to be that after Coal India takes it over, whether 100% of the coal can come back to GSPL, and after that, will there be an auction? Will GSPL be successful? At what price it will get? So considering these uncertainties, we have built in a certain increase in coal cost. And arrived at a fair value of around 209. The issue remains that if the coal cost rises further than this, in a worst case, the extent of imports of coal has to be much higher. Then obviously the coal cost can be much higher, because the imported coal cost will be at least 2,000 to 3,000 rupees higher per ton, and therefore, in that sense, higher the proportion of imports, there could be further challenges.
Fair point, Prasad. Thank you very much for joining us. Clearly, more unanswered questions in this space as to what will be the modus operandi of auctions and whether the right of first refusal. If a right of first refusal is given to the existing miners of those blocks, then perhaps bidding will not be that aggressive, because they'll just wait to see how others have bid and will only have to match it. If it is blind bidding, then they perhaps will be tempted to bid aggressively so as to keep their assets with themselves. We'll have to really, we are shooting in the dark in these issues. But let's come back to markets now. The important point is they're all in the green.